I got some fire plays for you guys that you must be invested in. These are going to be 5 stocks that I am personally buying right now, with a couple of new stocks, starting with the newest stock, Duolingo. So this is a very interesting stock that I want you guys to look into and purchase some shares if you want good long-term growth. I'm going to talk about specifically the market cap, how much opportunity it has, as well as some of the technicals. But first, what I want to say is that you're probably familiar with this company. It's a learning language platform, essentially, that offers gamified lessons through its online mobile app and website. So it helps users learn over 40 languages using interactive exercises. So I'm sure you guys have seen it. You just log into like the app and they have like reading exercises, writing, speaking, and listening. And they gamify the app. So they have like streaks, XP points, and levels. And the way they make money, which is what we care about, is the subscription model. Okay, the subscription model is the overpowered model for gaining a huge valuation. So they have Duolingo Plus, and they also have Super Duolingo for ad-free learning and extra features, right? So they have the free version and they have the paid version. Additional revenue from in-app ads is also a thing, by the way. So even if it's free, they serve a bunch of ads. So that's like not the best. So users, instead of seeing a bunch of ads, they tend to pay for the app if they don't want to waste their time. Specifically, the market cap is $16 billion, and the PE ratio is really high. But again, I mean, the PE ratio for Palantir is 670. So PE ratio doesn't really mean a lot. Basically, the PE ratio is like the price that you're paying for the earnings that you're getting. However, because earnings can change very, very fast, especially for companies that are very recently profitable, it's like a child that's in puberty. They're growing very quickly. So they can gain a lot of weight fast, right? Same thing with earnings. Earnings can bulk up real quick. So let me show you the statistics just to kind of like give you a picture of how much this can change. So the PE ratio has been high steadily, but you can actually see that the PE ratio was similar to Palantir, like 600, right? Look at this. The forward PE ratio is going to go from 182 down to 131. So you can kind of see how they're losing 50 off of the top in the next year, right? By their expectation. So that's like 33% growth. We'll talk about the growth rate in a second. I'm gonna pull up my notes. But that basically means that it's gonna go from 182 to 130, and then the next year potentially like 80, and then like 60, and then like 40, and then so on and so forth. This stock is growing a lot because the cash flow is growing a lot. So their sales are growing a lot. Let's go to their financials here. I'll give you a little bit of a picture. I like this specifically because there's an earnings play that you can play right now. They're gonna have earnings pretty soon, and that's gonna happen on August 6th, which is, in about 2 weeks. So I want you guys to be early. I want you to be early on making money. Making money, it's all about being ahead of other people, right? So yeah, take a look. The total revenue went from like 250 million to, trailing 12 months, which is what TTM stands for, trailing 12 months, is now $800 million, right? So we've had essentially a triple in the last like 4-ish years. So in the next 4 years, something similar can happen, right? Especially as they figure out how to monetize. So what I like about Duolingo, it's not like Amazon. Amazon's established, and Amazon can't double their revenue. They literally can't. They're already such a huge company. Whereas, kind of a smaller company like Duolingo, its market cap is similar to like what SoFi was when I was telling you guys to buy SoFi. That's why I think this is really like the next SoFi, Nvidia. It might not like 100x, but I can definitely see this market cap going from like 16 billion to like 30 billion very, very easily, which is like a double on your money. Same thing that happened to SoFi. That stock absolutely took off and we made money. You already know how we made money. We made money hand over fist, bicep over tricep. And yeah, the total revenue is 811. But there's also something you have to think about. Like when revenue goes up, earnings can skyrocket like a lot more. So you see how the company went from like negative earnings to $2 in earnings, right? Now, by the way, they decide kind of what earnings is because they invest their cash into growth. If they want to cut off growth, then earnings can go up to like $10. If they wanted to, it would stunt growth, right? It's going to take away from their growth because they're spending a lot of money on growing the company, right? Advertising and whatever, employee compensation, etc. But if they want to just like cut off a lot of their expenses, then yeah, like they can make their EPS go up to $10. They can like 5x it. And if that would 5x, right, then the PE ratio would go down a lot, right? You would divide it by 5, so basically 180 divided by 5 would be like 36. So they can make it look 36 now, but you wouldn't want that as an investor, right? Are you following what I'm saying? Like if they would 5x their EPS, which they can if they want to, it would be stupid, then that means their PE ratio would go down 5-fold, which, from 180, if I'm doing the math correctly, that's 36. So 180 divided by 5 is 36. I'm doing the math right on top of my head. But yeah, essentially it would be pretty cheap, right? So yeah, I just wanted to point that out because a lot of people will say, oh, Henry's stupid, he doesn't know what PE ratios are, it's so high. Well, no, like I know what I'm doing here. Been doing this for 10 years. So let's go to the chart. I want to show you what the chart looks like on Duolingo. So it's actually pretty interesting because over the last 6 months, there has definitely been some volatility, and now it has like pulled back to a point where I think it's a good purchase. So, we've had like a really predictable cycle of earnings for Duolingo, of like exciting earnings, and then investors sell off, take profit, they get excited again, and then they kind of sell off again. And now going into earnings, I think that the stock can go up to say like $400 per share. So we can have like a really good rise in the stock. And if you just take a look at like the 5-year return, it's over 150%. For revenue, by the way, the compounded annual growth rate, the EPS projection is like 50%. Right? And looking at free cash flow and net income, it's expected to more than double by 2027. So we have a very good financial roadmap, and they have something that I think is a really big strength is high growth in subscription revenue and strong user metrics. That's what I'm looking for. I'm looking for like investing in a business that actually grows, not a business that's like going down. So similar to like Robinhood, I was talking about like expansion and how they're expanding to different markets. Like that's a clear opportunity, right? Well, the same thing here. Duolingo kind of already has a huge base of like subscribers. Now it's all about like turning them more into like paid members. And I think what else is really interesting? Like I'm traveling right now. I'm actually in Serbia, but I spend a lot of time in Europe in general, right? I stay in the same kind of time zone. I go from like Estonia, Poland, Serbia. I was in Moldova. Just like I like Eastern Europe. That's like my culture and stuff. So what I've been noticing is like more and more people are like traveling the world, right? More men are going to Philippines and Vietnam with the tough dating culture in the US. More people are going to Colombia. More people are going to South America. More people are traveling to Western Europe as well, right? France, Italy, Spain, etc. And then when people like travel, like they want to kind of learn another language. So I think with globalization and like lots of like, globalization, basically people are like mixing and traveling and etc. More people want to learn languages. Like it's also interesting, right? As we have more money to have that freedom, which, there are people becoming a lot richer every single day, despite, I know the American economy is not always super strong and the average person isn't always benefiting. There is a lot of online workers that are making like a lot of money very fast. And yeah, I think there's just going to be a lot more demand for languages. And I think people are going to be paying for that. Like people want to learn new languages. I already have the most important languages. I speak English, Russian, and then I do speak some Spanish. I speak Spanish after living in Colombia for a year. So I think people want to learn more languages. So I'm really bullish on Duolingo. And another thing is, their monthly active users is just growing a lot. So even if, I think they will monetize more on current users, but their monthly active users are going up a lot. And also like ChatGPT hasn't like materially disrupted the use case for them, right? So ChatGPT is more so like writing to ChatGPT at the moment, whereas like Duolingo is just really an interactive app. So AI is not really going to disrupt Duolingo anytime soon. All right, with that being said, let's go over to the next stock, which is like Sweetgreens. I talked about Sweetgreens a lot. This is a stock that I personally like a lot over the last 6 months that has not had good performance. But if I log into my Robinhood account, I also find it super hilarious. There's always like one person out of like 30,000 of the viewers that's like, oh, Henry's account's fake. It's like, okay, well, I just logged into it. And then if I go to my account, you can see right there. So yeah, my account's doing really well, and I have some Sweetgreen stock. And Sweetgreens, I did really well because I told my Discord community after they had the last earnings that took the stock down, I strategically said, guys, it's time to buy. So you can see here that, and by the way, I sold the 15 covered call today during my coaching call. So I'm actually flat on this play so far, zero return. I just sold this covered call, which actually does capture earnings because Sweetgreens will have earnings on August 7th. So I sold a 8:15 covered call. I think that's fine, right? Like I'm just trying to collect some income right now, trying to get the account to, just a bit higher. So yeah, anyways, I ended up, selling a covered call, telling the community today, hey, we wanted to be on covered calls on Sweetgreens. I think it's a really easy play to make money. And specifically, I got into it last earnings when it went down to 12, I got it at 12.60. That's my average cost. I like it a lot. So I can like buy some more of it like right now. Let's just double up on Sweetgreens. I'll buy 500. Oh, that's amount, my bad. I'm trying to buy, yeah, that's not what I was trying to do. I was trying to buy shares. I was trying to buy 500 shares. That's weird. I never do that. Now I have like an odd amount of shares. You can see the video is not planned. All right, so let's go to shares. Let's just buy 466 shares because I want to get to like 1,000. That's like what I was trying to do there. So yeah, all right. So we purchased some more. So now we got 1,000. We got 1,000.65. Okay. But yeah, I like this stock a lot. And you see my average cost actually just went up. So I was at 12.60, now I'm at 13.51. That's because like I doubled up on the shares and at a higher price. So yeah, I'm just really bullish on Sweetgreens. I like this stock a lot and it has sold off like pretty tremendously over the last 6 months, down 57%. So for me, I just think Sweetgreens is moving towards profitability very fast with its automation-driven kitchen rollout. They have really strong digital adoption, so people are like ordering on the app, online to get their order, and they're just expanding into more markets such as like dinners. So like a lot of people, and myself included, like I would go to Sweetgreens for like lunch, but and I was pretty broke when I was living in US, so I couldn't really afford going out that much. Like Sweetgreens was a lot for me at the time. Like I was not eating salad for like 15 bucks. To me, 15 bucks was a lot, so I was eating more so at Chipotle because I could eat a Chipotle for like maybe $8. This was maybe 5 years ago. I had some money, but maybe this is more than 5 years ago. Actually, this was back when I was in college because I was pretty broke in college. So yeah, now they're expanding it to dinner, so that's good because now they can have more purchases throughout the entire day, not just at like lunchtime. The most recent quarter revenue was $166 million, and yeah, I'm really excited for August 7th earnings. So I think that the stock is going to do very well. So I think it'd be wise to kind of have some exposure into Sweetgreens. I think they're just like growing like gangbusters. And there's a really special time because they're really implementing AI-powered labor efficiency. So if you look at like, their biggest cost, it's labor. So a lot of like, fast food chains, they have to spend a bunch of money on workers, and Sweetgreens is deploying AI scheduling in like about 70% of their stores. And this has cut absenteeism by 33% and boosted labor productivity by 10%. So just really good stuff. And its Project Turbo further optimizes staff allocation, improving rush hour throughput by about 20%. So on all the efficiencies in the labor side, I'm very bullish. And this, for me, isn't just like a salad shop anymore. It's really like a tech-powered restaurant chain. And they've cracked the code on labor efficiency, and that's really the hardest part of scaling restaurants. It's like, how do you scale at a proper cost? Like, how do you scale premium food specifically without sacrificing profitability? So the margins are going to go up, costs are going to go down, and throughput is going to explode. That's the kind of operational like flywheel that Wall Street loves to see. So I'm telling you, I've made pretty good money on Sweetgreens, even like with smaller amounts of money. I was telling my Discord community, like, you guys should have like 3 to 5% of your portfolio in this. Of course, we have like many stocks in my community. Like, I don't put all of my plays out on YouTube, and I certainly don't put them out in a timely manner. So it's pretty hard because, well, first of all, I want private content because I've paid community members, but second of all, it takes me time to like edit these videos, and I have much longer like trading sessions during my coaching calls. So yeah, just wanted to let you know that. It's, you already know, it's the first link in the description. Now, strategic expansion is also really important. Sweetgreens is entering new markets, including Sacramento, Phoenix, and Cincinnati as part of their 2025 growth initiatives. And Sweetgreens is entering these new markets with about 20 of them featuring its automated infinite technology. So infinite system or the infinite infinite kitchen system really automates the assembly of salads and grain bowls using a conveyor belt. So they got like conveyors like operating and like, hey, here's your broccoli, here's your carrots, here's your kimchi, here's your cucumbers. And it's just kind of like making it really fast. So they're like using robotics. Like that's really, really cool. I mean, that saves money on labor, saves money on cost of goods sold. And yeah, it kind of makes this more of like a tech play. And like Wall Street obviously loves tech. If you like notice like whatever stocks are like taking off like massively, it's really like tech stocks. Like we got AMD taking off massively. We got NVIDIA taking off massively. Palantir is absolutely like through the roof, right? So a good way to make money, especially in 2025, because a lot of people are like getting laid off and AI is taking a lot of jobs, but you know, just invest where the money's going. Just follow the money flow. If you just follow the money, it's really AI. So like following the cash trail, like where is the money going? Like where are people putting cash? What sector of the economy is gaining strength? Well, that's AI. So just really just follow the money, right? Now let's go into the next stock, which is Archer Aviation. I noticed that this video is getting kind of long, so I just want to go like real quick into Archer Aviation. It's basically like, I'm basically kind of bullish on the eVTOL market, the electric vertical takeoff and landing industry, because it's projected to grow 35% annually through 2030, driven by urban mobility, defense applications, and automation demand. So, I mean, I just think the stock is probably going to be worth like $15 plus, like between 15 to 20 bucks within the next 12 months. And that might not seem like a lot, but it's actually a lot since the stock is pretty cheap. A $5 move would be almost 50% rise. So if you look at like the 6 month right now, it's up 50%, and we just got a really nice bounce. And I've been in the stock for a while, so like, yeah, not to brag, but my community is making money, right? we're just making good money. So yeah, like I'm up 72%. And I bought this maybe 6 months ago or so. Average cost of $7. I do wish I would have put in more money. It only makes up about less than 2% of my portfolio. Yeah, you can see how the stock is down about 6% today, which I actually think is a really good buying opportunity for an investor that's looking for, you know, kind of like a discount. Also, the reason why it's down, let me be very like clear with you. It's because of the capital raise. So Archer recently raised capital, which caused a negative reaction in the market because investors are essentially like afraid, since raising cash means that you're diluting current investors. So the reason why companies like raise money to begin with is because they want to fund more expansion. So they want to build factories. Maybe it's like research and development, or hiring more staff, or like marketing, right? Or to pay off debt. So replacing like high interest debt with equity or cash, or just to stay afloat. Like a lot of companies are burning cash, and Archer is, let me be honest, like being straightforward with you, it is a company that is like burning cash right now. And this is, you know, often bad because investors like will, you know, they want to sell off the stock because they don't want to be diluted. When they raise cash, your percent ownership actually goes down. Yeah, and investors like they don't want that, right? Here's the thing, it's really not that bad. Raising cash is perfectly fine. It's totally okay with me, because if money is being used efficiently to create long-term value, right? You're an investor, guys. If you're new, you're like following all these traders on YouTube and you're listening to them. You're like, well, what's the hottest thing to buy? How do I make fast money? But if you take a step back, like, what are you doing? You are allocating cash into a company that's building long-term value. And if it builds more long-term value, it will be worth more money. So it is really simple, and that's all you're doing, right? So if the company is actually building long-term value, then borrowing money makes sense. Like I've said this on my coaching call, it's something along the lines of, if you have like a pizza shop with one oven and the line's out the door, and you have no more money to buy a second oven, and you end up borrowing money to buy a second oven, but now like you can serve more customers, yes, do it. Like borrow money, like that's not bad. That's only bad for like dumb people that they can't pay off the debt. Like they're not making anything. They just take out debt. Like someone makes 50K a year and they're like, oh, I'm gonna take out some debt because I want me a new car. Okay, great. On 50K, you're gonna buy a new car for 80 grand. Makes no sense at all, right? But if you are like borrowing money, or you're taking out debt to like fund a business, which is like going to make a lot of money, then good, right? That's a good form of debt usage. So in Archer's case, the market reacted very negatively because they are still pre-revenue. So it does make sense because they've already burnt a lot of cash. But this raise is actually good because it's really extending their runway. Archer's pre-revenue and it's burning cash fast, but the stock has actually had a really huge run up. And what's interesting is this is actually something that I would put into the category of financial engineering. So what they're doing is, because the stock is so strong, they're raising losing money at a higher valuation, right? Because the higher the stock goes, then the more they're worth, and the more they're worth, they can raise capital at that like market cap at a higher valuation. And right now, because there is like a lot of excitement from retail traders, it's like crazy actual excitement, and the sentiment is just very high. They're taking advantage of that. They're just raising capital at a higher amount, right? Like I can make a follow-up video on that. Let's keep going. Next stock is Shopify. You know, this video will get to 30 minutes, so I'm gonna skip Shopify. But real quick, I essentially think that Shopify is going to outperform the S&P 500. You should seriously take a look into this company because they have a strong competitive advantage and e-commerce is growing very quickly. I'll talk more about it in my next video, so make sure to subscribe to this video, and I'll talk about Shopify as part of like the list of stocks that I'm like purchasing right now that I believe you will make a lot of money owning. So let's go to like my fifth stock, which is SoFi. No surprise, like are you guys getting like stupid rich or like are you getting stupid rich? It's like only one question, right? Like are you getting dumb rich where your pocket is flowing with cash? You're like, I don't know what to do with it, because if it's not, then I don't know what you're doing. like that's what's going on right now. Like that's the kind of situation we're in right now, right? SoFi is at $21.50. Actually, let me refresh this. We're at, well, yeah, $21.45. I think that this stock is very strong on the technical chart. The momentum is obviously like insane, 40% in 1 month. Like who makes 40% in 1 month? This is all from really them acquiring customers and being able to sell those customers. Amazing. So SoFi's like financial matrix is like pretty much like child support. Like once you're in, like you either pay your child support or you go to jail, right? That's it. Like that's your two choices, right? In America, in America at least, right? And SoFi kind of puts you to that financial matrix, but kind of like in a nice way, right? So like they get you on a bunch of products. They start you off with one product, whether it's like a student loan, and then they offer you like credit cards, investing, home loans, and yeah, they're CAC. So I talked about CAC. It's a funny word, right? CAC. It's like basically customer acquisition cost. So if you look at any of like the big businessmen, or you like read some of like the best investors, they look at like, can a company scale, and like how does that work? Well, on Silicon Valley, right? Not on Wall Street. Wall Street is like kind of, to be honest, like I kind of like, not kind of, Silicon Valley people are smarter than Wall Street people. I know everyone like ideates or whatever that word is, right? Like you see like Wall Street people as like the top. Well, Silicon Valley is like smarter than Wall Street. They actually innovate, whereas Wall Street just like allocates capital. So if you actually look at like the innovation, like SoFi is actually innovating. Their marketing is just amazing, and their tech stack is amazing. So they have an incredible upsell engine. So I think the stock is easily gonna, you know, as I said, I think it's easily a $30 billion company. And then SoFi is essentially just gonna continue to increase in value over time. The PE ratio is like very reasonable. So yeah, these are the 5 stocks I'm bullish on. I'm gonna make another follow-up video fairly soon on these. If you enjoyed this video, subscribe. I'm gonna make you stupid rich.